video. So today, this is basically just going to be covering the update on the last video, which was this USD JPY trade. We are currently up 575 pips and running. This is our take profit 3 that's hit, and right now this is a decision area to either hold or to get out, because we still haven't broke any lower highs. As you can see, it shot down pretty quick. Not quick, but it didn't consolidate going down. It just shot straight down, which lets us know that there's a lot of momentum going into this trade, and can be a monster trade for the whole month going into the end of July. So right now, usually when my take profit 3 is hit, I probably have like 95% of my trade trimmed out and just letting the rest just run and taking whatever I can't take and putting my trail stop at take profit 3 and just let it run and just check it back within the next 4 hours to see if my trail stop has been hit, and if it hasn't, I'm moving it down even more. So basically what we saw here was trend change after USD JPY has been very bullish for the past months. We saw it chopping down right in this area, and then right here we got these two candles. Hold on, let me zoom in. These two candles right here, really 4, but if you get 4, that's how you know it's going to be a very strong. But these two candles, this blue candle right here and this red candle right here, it's a very, very, very strong reversal candle pattern. It lets you know that the trend will run for at least to the lows for sure. We also got 3 candles that came after the pattern, which lets us know that it's another confirmation that the trend is going to change. Now, of course, after every impulse there is a correction, and as you see, after that correction, it came and tested the liquidity highs. After it went and stopped out everybody in buys right here, that stop loss might have been right in this area, because people thought, breakout traders are thinking that it's going to keep going, but instead it gave them some pips and came back and took out whoever stop loss was still in. And then for breakout traders coming to the sell side, you can see it gave them some pips while also taking out the buyers, and then came back and took out the seller stop loss. But if you had your stop loss, if you got in up here, right here at entry, and put your stop loss at the high or above the high, you're still in. But me personally, I wait for the impulse right here. It gave us how many pips after the breakout? 30, roughly, a little over 30 pips. And then, you know, like as a quick trade, if it breaks this again, you can target that low. But we're really waiting on it to break these lows, which it did in this candle right here, and also hit our take profit if we got in right here. So now that we know that the trend is, there is a change of character and that the structure has been broken, we can finally look for sales. As you can see, it's consolidating. So we are waiting for a red candle to break the low with very bearish momentum, and as you can see, we didn't break again to right here, but our next candle is not red, so we don't get in. So we know the next time we break is going to break hard, just off the momentum of, like, we have this is an impulse point, because you see over here it gave an impulse and a new high. You can see these big wicks, which shows a lot of volatility right here. You see, like right here, all this is showing big wicks because there's a lot of orders in right here. So as we zoom out, you can see that we're waiting on another impulse, because we just broke the lows again, and we waiting to show where the market will go and give us how many pips it will give us for our take profit 1 in our decision area to hold. So right here we got 60 pips, which is great. So after the impulse, boom, 60 pips, it retraced it back to the trend line also. Boom. You can take your, I wouldn't necessarily take that trade because I'm waiting on it to break where the impulse points and key level is. Because me personally, I always tell my traders, if you are not entering at a key resistance or support, a break of key resistance and basically support, then you're going to get either chopped out or stopped out. See, if you got in right here and put your stop loss right here, you got stopped out. So if you get in right here, there's basically little to no drawdown, which is like maybe a 3-4 pips. But if you put your stop loss like 15 to 20 pips, or maybe 10 to 15 pips, you can still have little to no drawdown, and your take profit one is smashed. That's 60 pips and 1.5 candles. Really, well, 2.5 candles, and you still holding because this is a bearish candle. Very big bearish candle that shows a lot of momentum, and then we can head to the downside. So after we broke through, this lets us know that price can really trend down. After we get this order block, you can keep holding because you know that price, when order blocks happen, you know that price is going to retrace to the order block and keep pushing down. And if it doesn't respect it, you know to get out the trade. So right here, it shot down again, which as you can see, it came back and tested. Shot down, came back and tested the order block, shot back down to our take profit 2. Take profit 2. So now that the take profit 2 is hit, we still broke take profit 2 key area with bearish momentum. So now our take profit has turned into a trail stop. So I tell my traders, every take profit area is a key level and a decision area. You don't always take profit, because your trail stop will act as a take profit if it comes back and takes out and retraces our level. But if it doesn't, we keep holding. This is how I'm able to stay in all my trades. So as we zoom out, you can see the next day we shot down, no drawdown. We just kept marking the lows, and if we retrace, we got in small lot size down to our next key level or take profit area. And right now, take profit 3, I usually tell everybody take 90% of their trade or all of it, and then get back in with little to no risk, small stop loss. So right here, take profit is basically supposed to be in a trade. Take profit 3, if it's not really trending, has been your decision area and a stop level where price would really reverse. But as we see this big candle, we're still going. Maybe the next 4 hours it might retrace and then we'll get out. But as of right now, we're taking out 575 pips and we're calling it a week. The key to this is not being greedy though, just taking what the market gives you. The market will tell you when and when not to be greedy. As you can see, we created an impulse, correction, break of structure. We got in on the entry, hit our first take profit where it showed us, pushed through that take profit, created a lower low, lower high, which also was in confluence with the order block, hit our take profit 2, but we pushed through that, kind of stayed around this area for a little bit, pushed back down, creating lower lows, another order block, pushed back down again to hit our take profit 3. Right here we kind of pausing a little bit, but we got a very bearish candle, which lets us know that the next target will be the swing area low, which will be the right here, which is, you can see liquidity here, or can be right here, which is basically equal lows, which lets us know like when the trend was going up, price respected this area. So you can see where a lot of liquidity is and what price has respected, just like we did here at take profit 3. So that's my outlook. I'm not going to go too much into detail because I explained it in the first video. If you need more details about the strategy, go back and watch my first video. which is not the best quality, but if you're a trader, then you know more details of what I'm talking about. But just keep everything simple. And yeah, like, comment, and subscribe if you can. Share these videos to any groups you're in. I have a VIP chat. You can message me on Instagram at 2times investments. The link will be in the description. And that's it.